Welcome back to Self-Invested, where we talk about how you can do better with money. In today's video, I've got a treat for you because I'm speaking to fellow personal finance YouTuber, Deandra, better known as Finance D, about her 95% mortgage experience. Now, the reason that I asked to speak to Deandra is because she made a video about her 95% mortgage, and I thought that it would be a good idea to bring her onto my channel to talk about her own experience from a first-hand point of view, so she can let people know why it worked for her or whether it works for her, and provide any tips to help others that are thinking about the scheme. If you want to watch that video, you can find the link down in the description of this video. If you do watch it, make sure you give it a like because it will help her channel grow and it will help that video be seen by more people. Also, if you like this video, if you like our chat, then make sure you give this video a like because, as I said, it helps the video be seen by more people and it helps the channel grow. Anyway, let's jump into the interview. So the first thing I was going to ask is, what did you buy and when did you buy it?
Okay, yeah. So thanks for having me.
Yeah.
So I bought a 3-bed semi-detached house. It's like a 1930s. And we bought it back in January 2020.
Yeah, 2020. And how much did it cost you?
It cost us just shy of 300,000.
And where did you buy? Was it
We're in
in
Essex.
London?
No, no,
Essex.
no,
Okay.
we're in Essex. Yes, yes,
Okay,
yes.
just outside of London.
Mhm.
And you used a 95% mortgage to buy your home.
Yes,
Why
we
did
did.
you choose a 95% mortgage?
There's a few reasons. To be honest, I only heard quite negative things about 95% mortgages. So it wasn't part of the plan,
Mm-hmm.
in all honesty. But what happened was my husband and I basically decided to look at houses to see what we could afford, and figure out how much more we needed to save, etc. And on the day that we actually went to look for houses, we met with a mortgage broker, and he was like, "Oh, let's just comb through your finances and see and discuss." And so we did, and he actually said, "No, you guys can buy." And we were like, "Well, we planned on saving for like another year." And he was like, "You can, or you can buy, up to you." So
Mm-hmm.
he showed us the options, and one of the options was a 95% mortgage. And I was like, "I'm not sure."
Mm-hmm.
And then we looked more into it, and we were like, "Actually, we're going to go for this," because my fear was, I had a
Mm-hmm.
huge fear that we would end up just getting priced out. So if we
Mm-hmm.
waited another year, what would house prices be in that year? Do we need to save more? I just didn't want to get in that hamster wheel.
Yeah, which
Uh,
has happened, hasn't it? Like I think
it,
house prices have gone up on average. Is it 20K? The
yeah,
latest reports are
yeah,
saying so. And you bought in January 2020, so
yeah.
that's just before sort of the market sort of took off. If you're buying in this market, it would be very different.
It would be very, very
Yeah.
different, extremely. So it really worked out as a fantastic choice for us
Mm-hmm.
because within 2020, as you said, our house price skyrocketed.
What did people say? So you said you weren't really considering 95% mortgages to begin with. I'm guessing then it's based on what maybe friends and family members were
Yeah,
saying about more 95% mortgages. And yeah,
yeah.
what sort of things were they saying? What
They
sort of
were
turned you
just
off about it?
like, to be honest, none of them had experience with a
Mm,
95% mortgage, yet everyone had an opinion.
mm,
So, it was the interest rates are going to be really high. They said I'll run into the risk of going into negative equity. And so, they were just like, if you can, you probably should just wait
mhm.
and save more just so that you can get into the next bracket because your monthly mortgage payments will just be
It's
higher than they
cheaper.
need to be. Yeah,
Hmm.
yeah, exactly. Cheaper if we've done
Yeah, yeah.
90%, more expensive for 95%. And so, but then some people didn't think that.
Hmm.
So,
Hmm.
like, for instance, my mum was telling me about back in the days when she got like 100% mortgage.
Yeah. I think
Oh,
that
no, no,
was
no,
pre
no.
2008, wasn't it?
This was
Yeah.
decades ago.
Hmm.
And so she got the full mortgage plus money to furnish the house from the mortgage. So it just seems insane now.
Yeah, yeah,
Um,
yeah.
Well, it worked out. It didn't work. It was fine.
Yeah.
And so she was like, you know, give it give it a go. You'll
Yeah,
be
yeah,
fine.
yeah. And yeah, I guess over time you start to build your equity in that home. So like when you come to remortgage in the future, as long as you know the value of your property hasn't sort of fallen or it's sort of gone up a bit and you've been keeping up with your repayments, then you should be in a better position to get a better rate in the future. But what you've offset is the chance of your property going up in value and being unable to sort of buy in the future. So just out of interest, what was the interest rate for your
2.67,
two point
2.69.
2.69? That's pretty good because
I know.
what I want to do now, I mean, and to at the start of January, so January 2020, I think the Bank of England base rate was around 0.5%. I think
Yeah.
it's now 0.1%.
One. Yeah.
So you would expect sort of mortgage interest rates to be even lower. But I think you struggle to even get a 10% mortgage at that rate.
I
So
know.
yeah, and I think that's just because the economy is sort of all over the place. Although interest rates are low, I think there's still a bit of nervousness in the mortgage market about
Yeah.
what's going to happen after sort of the furlough scheme ends and sort of things start reopening. I think they think there's going to be a bit of a shock to the economy. So I think that's priced into the interest rates that you're seeing.
Yeah, it is. And even when, I use a remortgage calculator now, I'm shocked at what the interest rates are now in comparison to back in January 2020, much higher,
Yeah.
even with a better loan to value, which
Mm-hmm.
obviously we'll speak about later. But
Mm-hmm.
interest rates have definitely gone up across the board. And with the 95%, the current 95% mortgage scheme,
Mm-hmm.
I think interest rates, the lowest you would get is around 3.9% now.
Mm-hmm.
So it has gone up
Yeah, it
a
has. I think
considerable amount.
that's probably for sort of a 5-year fix, which is, I think, when we start talking about practical tips for anyone thinking about the scheme, we can sort of get into. But as well, what I want to do is I just want to have a look at the Money Saving Expert Best Buy mortgage comparison. So I'm going to share my screen. I'm just going to have a look at what a 90% mortgage is in terms of interest rate and what a 95% mortgage is as well. So can you see my screen?
I can, yeah.
Okay, so this is something I prepared earlier, and I've basically used the Money Saving Expert website, and I've got a property value here of £300,000 with a deposit of £30,000, 25-year mortgage, fixed rate, and I've said 2 years, just to be consistent between the two. And I've also sorted it out. I've sorted it by the Money Saving Expert's total cost. So this is where they don't only look at the interest rate, but they also look at the setup fees, because that gives sort of a more realistic view of the cost of a mortgage. So the cheapest rate we're getting here is 2.4%, which isn't much lower than your current mortgage. And if we go down to the next cheapest, from NatWest, is 2.97%, which is actually more expensive than current mortgage that you have.
Yeah.
And that just shows the current state of the market. But all right, let's just look at this. So the cost for 1 year is £14,458. And what I'm going to do now is just have a look at what a 95% mortgage fixed rate for 2 years would cost, and what the interest rate is for that as well. So so here you can see the cheapest rate that we got is 3.5% for 2 years, and is £17,173. So it's, let's say, 3,000, just under £3,000 more. So in order for this to be a better deal, than waiting a year and going for a 10% deposit mortgage, you would need over that time the property price not to move up more than 1%. Because if that £300,000 home moves up by 1%, it's then going to cost more to buy it than it would have, cost to sort of take out a 95% mortgage. And I think that's something to consider. And a 1% increase in terms of house price historically is quite low. I think on average in UK, I think it's around 5% over the last 25 years.
I had seen a more conservative figure of like 2.5 to 3%.
two and a half to 3%. So
Yeah,
if it was 3%, we're looking at almost £10,000 sort of difference in
exactly.
growth. So if you had the opportunity, I mean, I don't know if this is going to be, the same trend in the short term, because I think there's going to be a lot of shocks to the economy, as I said. But just sort of generally speaking, you might be better off, sort of, going for a mortgage now rather than waiting a year, and potentially seeing house prices increase. And the other thing you got to consider is, all right, a 5% deposit is £15,000.
Yeah,
Can you actually save another £15,000 in, yeah, because that's if you were saving £500 a month, which is quite a bit, that's going to take you what, 2.5 years to actually save it. If you're saving £1,000 a month, which is quite a lot, maybe if you're living at home, that's something you can do, you're not paying any rent, then that will take you 1.25 years. So, like, if you're living at home, that might be sort of a gamble you're willing to take. But if you're not able to put that much money away, then going for a 95% mortgage might actually work out better than sort of trying to wait and seeing what actually happens in the mortgage market. But it's just something for people to weigh up, I guess.
absolutely, absolutely. And yeah, that was interesting,
Yeah.
and that's exactly kind of where we were at
Mm-hmm.
back then. It was
Mm-hmm.
figuring out, okay, it's going to cost us more
Mm-hmm.
technically to get the 95% mortgage than it would for the 90%. But in that year, do we think house prices will increase more? And we did.
Yeah.
We
You
felt that
thought.
it would.
Mm-hmm.
Yeah.
And I
Obviously, you
think
can't predict.
no, you can't predict. I think you can only make decisions based on the information that you have. Just based on that, you said it turned out to be a good decision. But yeah, so what is your current situation with your home?
Yeah.
How's the value changed? And I think you took out a 2-year fix. So in 6 months' time, I think you're going to be remortgaging. What's the likely LTV of your new mortgage going to be?
Yeah. So currently at this moment, we are at about a 72% loan to value. So it's gone.
Wow.
I know.
From 95% down to
I know.
72%. Yeah. And
Honestly,
that's based mainly on the value of your property going up.
mainly on the value of the property going up. Obviously, a bit because we're paying down our mortgage each
Mm-hmm.
month, and some of the principal is being shaved off. But mainly because of the increase in the house value.
Just out of curiosity, how, percentage wise, how much
Yeah.
has the value of your home increased?
Yeah, I'm like, oh my god, percentage wise, let me calculate.
You could do it rough. You could do
Um,
rough. You could do like
it's gone up about 25 to 30%.
Geez.
So
So if you'd waited a year, from January, say you only went up 20%, let's make it easy, and you waited from January 2020 to January 2021, 20%, that's 30, 60, that would have been six. So it would have been completely out of reach.
that's it.
Yeah, it would have been. So your deposit would have gone up by maybe like 3K just for a 5%
Yeah,
deposit. Yeah,
yeah,
and then you would have been again heavily reliant on you having a high enough salary to
mhm,
actually get secure a large enough mortgage to buy that property to cover the additional cost of that property, because it is mainly down to how much you earn. The
yeah.
deposit is only a small part of how you buy a property.
No,
So,
absolutely.
yeah.
It's been, it's definitely been a bit of an eye-opening experience for me. I thought the days of house prices soaring like that were over. And
Mm,
sometimes you hear that, oh, back in our parents' days, it was much easier, things. And so I thought I just really didn't think we would see anything like that.
hmm
But I did when we did buy this house, we really did try to think, what can we do to kind of do our best to get the best value out of this house. What do we think we can get? What do we think we could achieve
Yeah.
by buying in a certain area? So
Yeah.
we bought in an area that we felt had a lot of potential, untapped potential,
hmm
and I think it's starting to become a bit more uncovered. So
Okay.
that's kind of shot up the house prices.
We're gonna
Um,
cover that. We're gonna cover that
okay,
when we
okay,
when we give some practical tips, because I know
yeah.
people are gonna watch this to try and get tips as well as sort of understanding why it sort of worked for you and sort of hearing firsthand experience. I think we definitely need to give some practical tips about how they can make it work for them, because I don't think people should just blindly think, you know, getting a 95% mortgage, wait for your property price to increase, and you're gonna sort of, you know, you're gonna win that way. I think you still need to, you know, do certain things to put yourself in the best position to take advantage of the opportunity that a 95% mortgage gives. And just based on that, what are the key considerations for anyone considering the scheme?
There are a few.
Mhm.
Um, as you said, you know, you do have to take your income into consideration. So when you are getting a 95% mortgage, you will require a slightly higher income. You know, it's proportional, but a slightly higher income than you would if you were getting a 90% mortgage.
Mhm.
And so, you know, you can easily calculate this. You know, you can, obviously there's things online, but you can just do it with your own calculator. Most mortgage lenders give you 4.5 times your salary. So if, you know, that's a single salary or a joint salary, times that by 4.5, get an idea of how much you can afford, put the deposit on top of that, and you get a rough idea
Mhm.
if a 95% mortgage will work.
Mhm.
Another thing is the interest rate. So, you know, it is important to understand your interest rate, and make sure you can afford your monthly mortgage payments.
Mhm.
Um, and not only can you afford it at the current interest rate, can you afford it if that interest rate goes up?
Mhm.
And they do, to a certain extent. I remember going through the process, they do stress test your finances.
Mhm.
And so, you know, to make sure that if the interest rate went up even more, can you
Mhm.
still afford to make your mortgage payments? And so that is another important thing. I think overpaying your mortgage can be really beneficial, especially when you've got a 95% mortgage. So, seeing what the terms and conditions are for that specific mortgage, how much can you overpay or can you not at all? Is there any penalties or anything for overpaying? So, for us personally, we can pay up to 10%, overpay up to 10% per year on our mortgage without any fees, additional fees. And so, having that option is really important,
Mhm.
especially when it comes down to, say, you're just shy of remortgaging and you want to get into the next loan to value bracket. If you
Mhm.
have that overpayment option and you have cash available, then at least you can work your way towards that.
Mhm.
So I would say that would be another thing.
And I
Um,
think as well that sort of reduces the risk of negative equity, because I guess
100%.
that, yeah, that's one of the concerns as well, that you know your friends and family
Mhm.
told you if about taking out a 95% mortgage. And I guess for anyone that doesn't know, a negative equity is when the value of your home is less than the outstanding mortgage. So, say you took out the home you bought was £100,000 when you bought it, and you took out a 95% mortgage, so £95,000. And say when you came to remortgage, the value of your home had dropped by 10%, so it dropped to 90%, but you still owed, let's say, £93,000. That means that you wouldn't be able to sort of sell on your home without paying the bank, you know, £3,000 on top of, you know, selling it for £90,000. So and I think it rarely happens. I think there's parts of the country that really suffered with negative equity
Mhm.
after the last sort of crash in 2008. I think sort of in the southeast, and down here, I think it's rare for
Rare.
people to end up in negative equity, but it is a real risk. I think
Yeah.
especially in this current market where I think prices are inflated because of everything that is happening, and
Yeah.
if somebody's taking out a 95% mortgage with you know, a property that's overpriced, and you know, as soon as the drivers that are keeping prices up, like the stamp duty holiday, furlough scheme, and other things, sort of disappear, and their property value drops, and then they have to remortgage in sort of a lower market, they could really be at risk of negative equity. And I think we'll touch on sort of after this section, sort of practical tips people can and steps people can take. But I think what you said about overpaying is a really good option, because it allows you to reduce the amount that you owe the bank, more than your sort of normal repayments. And 10%,
less interest as well.
yeah,
it has an impact on the interest, which is good as well.
Yeah.
So yeah, overpaying is, if you can afford to do it, and not everyone can afford to.
Yes.
You know, mortgages can be quite high as they are. So, you know, it's not always something that people can do, but to have that option, I feel like is important, because you never know.
Yeah. No, you don't. And if your terms don't allow you to overpay, you can always save up alongside your mortgage. So when you come to remortgage, you sort of pay off a chunk, you know, before you sort of remortgage with someone else. That's always sort of a way around it if your terms don't allow you. But 10% is a lot. I used to think it was 10% of your monthly payments that they allow you to overpay, but it's usually 10% of the principal. So 10% of, you know, how much mortgage you took out. So if you took out £300,000, you'd be able to overpay by £30,000, for instance, which is a lot. Unless you're doing very well, I don't think many people are going to be able to overpay by that much. So let's move into sort of practical tips. You said something interesting in your 95% mortgage video, where you looked at how much, you know, your monthly cost would be of your net income. Can you just expand on it? Just
yeah. Sure. So we didn't want our monthly mortgage to be more than 30% of our net income. And that's generally the gold standard anyway. And, you know, the reason for that is because if you spend 30% on housing costs, that means you should have flexibility for other things in your life, and, you know, transport, food, utility bills, just daily life and having fun, being able to save some money, etc. And so we wanted to make sure that we weren't above that 30%. And sometimes it's quite easy to go above that. So where I think we are maybe at around 23 or 24% of our net income. And so what it does, it's just made it affordable for us. Because it's taken up a smaller portion of our income, and it's not the be all and end all. I think it's just a good step in financial planning and financial management, because it gives us the freedom really to save each month as well, even though we have technically a higher mortgage. Because it's a 95% mortgage, we're still able to do things to work towards our financial goals. And so
and it gives you a bit of bandwidth as well. It gives you some flexibility. Say, for instance, you and your husband currently don't have children, but say within, you know, this 2-year fixed rate period, you actually had children, and you know, your monthly costs went up. There's a bit of buffer space there for you to still be able to manage to pay your, you know, your mortgage back without it being a struggle.
Yeah, absolutely.
So, all right, what tips do you have for people to avoid the pitfalls of a 95% mortgage? What things can people practically do to sort of put themselves in the best position to take advantage of the opportunity it provides?
I would say the biggest thing for us, it was finding a house that we felt had potential. So being able to add value to the home is really important. And so, even though I'm going to say this, and this may be slightly controversial, but I'm gonna say it. So for us, it was important that we went for an older house that had scope to add value, to kind of change the flooring, paint the walls, make it more modern, even expand, you know, do an extension, go into the whatever it is. Really had more room to change and better, as opposed to a new build.
I agree with you 100%. I say it a lot on this channel. I guess new builds have their advantages, but I mean, you did. So I'm just going to expand on this point a bit more before we move on to the next one. First thing is, you said you went for a house, and because you didn't focus on it, but I think there is a difference between going for a house and going for a flat. So if you
Yes,
go for a house, I think you're putting yourself in a much better position. I think even
I agree.
now with like house prices that have increased, or let's say property prices that have increased, it's really houses that have really increased. I don't think flats
No,
have seen the same growth.
it's true.
And there's issues with flats. If you want to sort of have a look at my video, I did the problem with leasehold versus freehold. I sort of go into detail about it, but houses, freehold houses, or freehold properties, because you can get share freehold flats, are a
Hmm.
much better investment
Yeah.
than sort of flats. So just by doing that, I think that's one good thing. And then the older sort of property as well, I don't think that's controversial. That's factual, I think.
Okay. Yeah.
Yeah.
You know, I only say controversial because some
Yeah.
people love their new builds,
Yeah.
and
Yeah.
I
Yeah. Yeah.
personally, for me, it's not something I would go for. It's
Yeah.
not, and it's just not my taste.
Yeah.
But in terms of the 95% mortgage, we
Hmm.
needed to make sure that we could add value. And
Hmm.
when you're buying a new build, it's very hard to add value.
Hmm. Definitely.
Yeah,
Definitely.
because everything's done to pretty high standard
Yeah.
already.
Yeah.
And so it's just very hard to,
Yeah.
to add anything in addition. The other thing is about location, location, location. You know, it's tempting to want to move to an area where it's already swanky and everything's beautiful and everything's, it's
Hmm.
tempting. But if you can, especially if it's your first property and you're buying and you're using a 95% mortgage, it's okay to humble yourself a little bit
Hmm.
and just be like, look, this is not my final home. I'm going to buy in an area that has potential, and
Hmm.
look at the surrounding areas, which is what we did.
Hmm.
We saw what the house prices were in the surrounding areas, and we know that can very much impact the current area that we're in. And I'm not talking even far. I'm talking like 3-4 streets away, and we were seeing what those house prices were, and it was like, oh, we could see some of that momentum get here because things start to expand out.
Hmm. Hmm.
And so location was really important. Also, don't be so London centric. And this is not for anyone who, this is not against anyone who wants to live in London, but my husband and I are Londoners, but we now live in Essex. And in London, if we bought a house, well, we wouldn't have been able to afford a house. It would have been a flat,
Hmm.
leasehold, all of that.
Hmm.
Or we thought, or we can just move further out, still be
Hmm.
able to get into London within an hour, move further out and actually get a house with a big garden and the
Hmm.
potential to increase. You've just got to start to think a bit big picture,
Yeah.
I would
Yeah.
say, on
Yeah.
a more big picture level, instead of just being so insular and thinking, I want to be in London. Okay, all I can afford is a flat, so that's what I'm going to buy.
Hmm.
Okay, well,
Hmm.
look outside. Why don't
Hmm.
you why
Hmm.
don't you look at different areas? Look what's happened with COVID-19. The fact that more people than ever have worked from home now and
Hmm.
have that experience. So a lot of people, even though a lot of people will have to go back to the office, there's now a lot more flexibility.
Hmm.
So some people are working from home 3 days a week, as opposed to never been able to work from home before. So
Hmm.
you don't need to live as close anymore, and people are realizing that. And another thing that I think has happened during this lockdown is people understanding they need space. So
Yeah.
before it was like, oh, a flat is fine, cool.
Hmm.
And then they were like, oh my God, I'm going to lose my mind. I need a garden. And,
Sure.
I need a decent living room space and a kitchen and a dining room and all of that type of stuff. Space is important. And I don't
Definitely.
think you can
Definitely.
underestimate it. You can
Uh,
quickly grow out of space.
yeah, and we definitely have it with our place. So we got a 2-bed flat,
Yeah,
and so we made a decision to get a 2-bed flat because we knew if we had a child in our in our home, then having a 1-bed will quickly grow out of it. But now we've got 2 children in the space of 5 years, and the second room is a small room. The only outdoor space, luckily we're on the ground floor,
yeah,
and the only outdoor space is outside the front door, and it's just hard landscape. We put some sort of fake turf there, but
yeah,
it's not really a family home. And
yeah,
so like we would have benefited a lot if we sort of looked a bit further into the future and thought, all right, what can we do? It doesn't need to be a forever home, as you say, but what you know do you have a garden?
Yeah.
Even just going for sort of a freehold, I think you do need to look at the bigger picture, because if you just look in the very short term, you can quickly grow out of your home. So
Yeah.
yeah, I think what you're saying, you're giving a lot of value there. Um,
Yeah, no, and that, even in terms of what you're saying, in terms of 95% mortgages, the other thing that we needed to make sure that we did was
mhm,
we bought a house that we could live in if
mhm,
we had to for 10 years at
mhm.
least. Because
Yes.
if we did fall into negative equity, negative equity only matters really when, if you're trying to sell or remortgage or
Mhm,
whatever else.
mhm.
If you're gonna stay in the house and you're not trying to sell, it's
Yeah,
it's
it makes
not
no difference. Yeah,
it it's
yeah,
not as
yeah.
big of a
It's not
deal. So
crystallized. It's not
no, it's not
crystallized. Yeah,
crystallized.
yeah, yeah, yeah.
Yeah. So when you think like that, we thought, okay, let's buy a house that we can live in for 10 years.
Mhm,
We may not,
mhm.
but it's feasible. Even if we had two kids, we've got, space for two kids. And then if it was a negative equity for 5 years, the chances are it's not going to be a negative equity for
Yeah,
10 years.
yeah,
Come
yeah,
on.
yeah. Yeah.
You know.
Yeah, yeah, yeah. And I think that's another good point. I don't know if you're going to say this, but just because you said it, I'm going to say getting a long-term fixed rate mortgage. So not just going
Yeah.
for, a 2-year fixed rate
Yeah.
mortgage. Maybe it'll be a bit more expensive, but it just gives you a bit more peace of mind, and it's going to be 0.5% more, less than 0.5% more. Getting a 5-year fixed rate just allows you to, have a longer period to ride out any bumps along the road. But
Yeah.
yeah, Deandra, thank you. Thank you for joining me to chat about your experience.
Thank you so much for having me.
Yeah.
It's been great.
So that brings us to the end of the video. If you enjoyed our chat, make sure you give this video a like. And as I said, if you want to have a watch of Deandra's video, then you'll find a link down in the description to this video. Make sure you give that video a like as well. All right, take care. Bye.